Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So we had the Fed today come and go. We had GDP come and go. And I guess the best part about today is today will come and go. And with that said, we had a strong tape most of the day I guess to start all the way through to even a little bit after the Fed. You always get a few different gyrations back and forth after the Fed. They try and make as many people as possible feel a little bit off, but really the news wasn't much different. The news is that they're going to taper, and it's going to be in the same pace that they've already described. Yes, they're going to be a little bit more focused to make sure that inflation's intact and that rates don't go up too quick. That's why maybe you saw the the TBT sell off and gold get a little bit of a bounce off the lows. And all in all, another day in the life. And sometimes this happens on Fed Day. And at this point, there's still a lot to like, and there's still a lot of individual stock action, but we're just at that area where, for me, I'd rather be tactical. Okay, there are a few things that I'm seeing in my head that I don't want to see transpire. Besides, the month being over, and you take a look at the chart on a very macro active basis. We've had a heck of a move, and if you look all the way back from where this rally started in November, here's that trend line, that got tested here and held. This was that accelerated trend line when we finally had that May 22nd outside day. We had the move lower. This was your snapback digestion into July 4th, and this was a really nice spot to put on some longs, which I think we went back into a bit of a portfolio approach, and then here we are near the highs right in front of 1700. So taking a closer look, what was today? It really doesn't mean much yet, okay, in the whole scheme of things. What you do have is you have today's the end of the month, so people, if they wanted to mark things up, they did. But then everyone could say tomorrow you have new funds coming in, whatever. Bottom line is, if you were playing for a breakout move above 1700 or 170 above the highs, didn't happen yet. So if you've been long, and you added for a breakout trade, you had to take that trade off. If you're looking for a 1 to 3 day move and you're being tactical and you haven't been holding swing trades this entire time, this type of tail should have got you probably flat or out of your longs with the spiders. And maybe some would be thinking a little bit short, okay, with the fact that you have a wedge here, a little bit of a topping tail, a small red dog reversal where we went, what's it called, above the prior day's highs and reversed. But again, it's not like sellers took massive control like they did over here where you had your breakout, failure, closing, engulfing 4 or 5 days. This was just another day in the life, maybe in the end of July. So we'll see what happens here in the coming sessions. We still have, jobs Friday. So I think, shorts might not want to get, sink their teeth in here, in the same way longs might not want to be adding new money for a breakout above 170. So what does that mean? That means, if you come back to me, that you don't have to be all in long or all in short. You just want to be tactical, keep adding to your month, keep making trades, and just, continue to know your time frame. The one thing I did point out, in the last few sessions is, Japan, it hasn't been like the leading indicator where whatever they do, we do. They've been like a hyper version of us. Their gains were bigger and their losses were, swifter. And then if you just, before if you want to take a quick look here, you will see that right here, that was the same outside day, much sharper decline. Then you had some base building down here. You had a breakout above, and then right here, it looked as if it was game on, ready to make an attempt to go at those highs, and very quickly this happened. Boom, 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 all the way to trend line. Okay, so in 4 sessions, took back a lot of this area. So, with that said, I'm not saying that that's going to happen in our markets. I'm just saying that, it's the end of July. I wouldn't have excessive risk on, right around here. Now, one thing to note about the end of the month, just for traders, because I spoke to a lot of traders on the floor, and I think a lot of guys did have their best months in a while or had a good month in July. One note to traders is if you had a really good month, well above your average month, don't say, wow, August, I'm going to kill it. I'm going to do even better than I did in July, because typically you'll give it all back and then some. What you do is you say, wow, that was a great month. There was a lot of opportunity. We had a 5% move for the S&P in July. That means there's a lot of tradable action. There were a lot of nice calculated areas. If I could just then do my average month in August, I'm continuing to put together my year, and you have 2 or 3 really good months within your year, and you try and make your average nut every month, and all of a sudden you're doing well, you're saving money, and you're living your life. So anyway, if you did have a great month, don't go in it, in the next month with guns blazing. I would say just say, you know what, I'm going to go in, do what I did to get myself here. The action might change. Let me not expect too much and maybe be pleasantly surprised. So with that said, let's take a look real quickly at the Russell. Here, I would say same type of thing. Overall, you don't have that much to worry about, especially on a macro level, but on a micro level, it tried getting back to the highs and sold off here. And again, you have a small wedge type formation. So if you were playing for a continuation move, you have to get out of the way. If you're playing for a sharp break, it hasn't happened yet, but you have a small topping tail. And sometimes the day after Fed, you just, get an inside day. So that's why, don't put too much on this except for probably a spot to take some risk off, okay? You look at the XLF. I was trying to be long the banks, and some of them, worked out really good early in the day. Then they showed some relative strength. And then here too, you had a breakout, topping tail, lower high. So, on a short-term active basis, a little negative looking. So again, not a bad day to take down some risk just in case. Not a day to go again, balls to the wall short, but that type of day, if it leads to a break of this area, then maybe you get the 21-day, or maybe, you get a move to retest here. I was trying to be long Citigroup, and Citigroup looked great and then pulled in and, closed pretty weak. So, at this point here, another small topping tail, but what is it? It's still above the 21-day, still above the 50-day, still well above this. So, the bottom line is you just got to play to your time frame and look for what, where, just the type of trade you're doing. And I was along Citigroup today. I was in it for relative strength, saying, you know what, maybe, this is the day the banks have a nice day one where they close near the highs and we then push through 1700. I want some long exposure there if that's the scenario. Because we closed where we did in the markets and a lot of things close off the highs, that's not that 1 to 3 day scenario that looks like on the chart that's playing out. So took a step back. Plus tomorrow I leave in the afternoon for a guys weekend, which will be nice. Anyway, so just wanted to keep it real and keep it, keep it tight. Maybe sometimes too tight. Look at Apple. Apple, nice little flag here today. Okay, talked about the 1 to 3 day tactical play. We talk about this type of tactic a lot in our education courses, how you have a gap, you protect it, trade above it. Well, lo and behold, today, it rallied, was up, tried to break through this high here of 457. Some people sold it well there. And then what did it do? It came in, tested yesterday's low, and held. So right there, look what it's trying to do now. Maybe another flag to let it go another day or so, and then potentially continue to the 200-day, which it looks like it's on the road to because it is acting better. Okay, so nice trades in this one. Facebook, I actually could have made some cute money short here on Facebook today. Okay, Facebook, we talked about this, the cup and handle pattern. I'm not going to continue to go into it, but you want to go more tactical, shorter term. Okay, this is what you had here in Facebook. Okay, you had your really nice gap up. Then here was your flag. This was your buy signal. Okay, and then today we talked about the pivot price here, another tactic we talk about for either taking some of your long off or maybe even looking for a tactical short. Traded through 37.96, came back below. You could have shorted this area, put a stop in 40 cents higher, and made yourself 2-3%. So now what do we have? We have a new point of reference. Let's see if we could hover in here for a few days or maybe even come in a little bit more. But ultimately, I think this pullback will be buyable, but the question is where? As of right now, though, this type of day should have got you lighter if you're short term. And now let's figure out how long it takes to continue. And one way, one tactic you look at is your Fibonacci retracements. You want to see, how much of this move is committed to. And you could tell by the retracement rules. Right here, this is your 25% retracement of this move from the earnings. So, 35.42 would still be deemed very strong. If it comes in, holds this, goes sideways, you're going to know that this stock is pent up. The speed's going to be fast. You're not going to have many pullbacks. If we break below today's low tomorrow, this doesn't hold, and it could still make its way down to the 0.382%. It's still strong, but then it's going to take a little bit more time to absorb what's been a big move. So as of right now, we'll see how you open tomorrow. There's lots of trades intraday on this one. This one happened to be a better short today than long, just like we kind of spoke early morning, saying if you didn't buy, when it cleared this descending channel after hours, or buy on this day or add on this day, you really had no right, buying here because everyone in the media was talking about how Facebook was back to the $38 price. Entries and exits still matter. TBTs, pretty ugly bar. Okay, they broke it out early, which sometimes always gets me skeptical. That's why you didn't see me jump in. And we talk about momentum. If you were playing the TBTs for momentum for a move above 76, 76 and a half, you only stay there if the momentum stays. What happened? Opened up, closed on the lows. Not very good short term. Okay, doesn't mean it's game over, because look at this trend, it's still intact. It hasn't broken this and that, but this should have gotten you out of some of your, some of it. And if you were in it short term for a move to break out and continue higher, this type of day says, not ready. So this is a day that you clean up a little bit. Okay, and then wait to see if it amounts to anything else. Gold also, was weak early, but kind of held where it had to. And, it's been trading inverse to the TBTs lately. And, at this point, I wouldn't say it's ready to go, but it's still hanging in there. Doji tight above this area in the next session or so. It could squeeze again. But again, today's Fed day, so a lot of things happen that are a little out of the realm. But with that said, it was weak first, rallied into the close, and now it's still in the game. I wouldn't just have short on the brain here with gold because, again, since the blood on the street lows where you had this nice red dog reversal, okay, it hasn't, it's been trending very nicely where it just held on to that trend last minute here. So anyway, TBT, GLD, still inverse. TBT, little reversal or pretty potent reversal. So if you're short, if you have it in the drawer, keep it in the drawer. Okay, that means you own it. You're going to sit in it in the next 6 to 18 months. You think that potentially rates will be higher, and I do think that's the case. But if you're short-term or intermediate, today's bar says, you know what, take a step back, or at least see what happens tomorrow before you have any kind of size. Gold also, downtrend all year. We've talked about those exit points at 161 or 150, wherever. Now it's trending and it's acting a little bit better. See how long that continues. Today, it could have fallen apart. It didn't. The banks also tried to get going. They didn't have momentum. Spiders tried to break out above the highs. Maybe not ready yet. Maybe that tail leads to, a little bit of a rest. At this point, just a day to clean up. So with that said, I'm not going to get into everything. I have to actually run. But I will say, today's close should have got you a little bit more neutral. Some saw me exit positions like, Red Dog, you got to get short, you got to get short. This is what we're looking for. You know what? Maybe it is, but I just didn't feel like reversing what I've been doing, which has been very tactical. Especially, day after Fed day is sometimes tricky. But today got me, basically flat. I came in actually flat today too because, we had a nice, tactical move in the Facebook and the Apple and some banks. At this point, I'm like, you know what? End of the month, let me just see. There was times for portfolio approach, times for tactics. Macro investors, I wouldn't be losing any sleep, but intermediate active that puts together a month that to pay their bills, I would just be a little careful right around here and be 1 foot in the door, 1 foot out the door, or a little bit more neutral. So have a great night. Scott Riley, T3 Live. See you at the morning call. Have a good one.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.